Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The SEC sued Coinbase on June 6th, and since then the stock is up almost 37% as I'm recording. This is a really surprising reaction if you haven't been following Coinbase, because it seems like the government is coming after the company. But I have argued here on this channel that this may actually be good news for Coinbase long term. So I want to get into exactly what's happened since then. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my deep dive on Coinbase, which I'll link to below in my newsletter, Asymmetric Investing. I think you'll like that. I'll start first with what the SEC charged Coinbase with. They're going after the company for selling unregistered securities and offering staking as a service. These are kind of two separate things, but basically Coinbase's staking service, which is really part of the operations of a blockchain, is something they're going after, and there's specific cryptocurrencies that the SEC is arguing are securities, and so you can't offer things like staking. That's the biggest question that's involved with this case. But what I think is interesting is since then, we have seen a Bitcoin ETF be offered up that the SEC looks like it may actually approve because it's coming from BlackRock, one of the big financial institutions. We have also seen this crypto summit took place, which Coinbase CEO Brian Armstrong was one of the main speakers. And going through this, I thought it was fascinating who was involved. Not only is the Financial Times one of the partners in putting on this summit, but look at these financial institutions here: BlackRock, Fidelity, Franklin Templeton, the Brookings Institute, Ribbit Capital, Union Square Ventures, Abu Dhabi Global Markets, the European Commission, and former regulators from the FTC and SEC. This is real institutional power that's talking about the state of crypto. This does not seem to be something that the market or businesses are starting to shy away from. In fact, it looks like they're starting to lean into it, saying this is an opportunity for us to take a big market share of an industry that's kind of down and out right now. So what did they talk about? The crypto ecosystem's resilience. That was the first topic. Powering financial services. The real use cases are driving adoption right now. We're going to hear less about number go up, number go down, and more about how do you actually use the blockchain and what's the utility that you can actually put in place. There's a race among global financial centers to position themselves as crypto hubs. Ironically, the US is taking the opposite approach by going after companies like Coinbase, but that's not the case in Hong Kong and the UK, in Europe. They're actually starting to put rules in place which could allow this industry to flourish. The other thing from a financial perspective that I thought was really fascinating is Coinbase used this time to use some of the cash on its balance sheet to buy back some debt. So they repurchased $64.5 million of convertible senior notes at a 29% discount to par. So these are convertible notes that had a 0.5% interest rate, so very low interest rate, but they're buying them back at a discount. Basically, the market gave Coinbase cash to just borrow for a little while. And now that interest rates have gone up, the value of that debt has gone down. So the company said, fine, we will just buy this back and have less debt on the balance sheet. Not a massive number there. $65 million isn't huge for a company with $5 or $6 billion in cash, but really notable that they're being aggressive in buying back debt. I've argued here on this channel that the SEC going after Coinbase is actually going to be good for the company long term, because it's going to give clarity to exactly what the company can do, what is legal, what's not on the blockchain. It'll allow innovation to take place. It'll allow new companies to take place. And then Coinbase can start to settle into its position in the market, providing services to a lot of companies. Coinbase has been known so far as the company that's providing trading and a marketplace for trading a lot of different tokens. But I don't think that's the future of the company. The future of the company is offering more cloud services and identity services, wallets as a solution. There's all kinds of technology that Coinbase is building that's going to be fundamental to using the blockchain, whether that's for finances, for loyalty programs, for trading stocks. There's a million different use cases where the blockchain could be more efficient than the systems that we use today. That's the disruption that Coinbase can be a part of, and knowing exactly what they can and can't do is going to be forced by this SEC lawsuit, whether it's going through the courts or whether it's Congress finally being forced to take action and make rules that make sense for the entire industry and make the US a hub for crypto innovation instead of being cut out of the innovation that's taking place. I think that's ultimately why Coinbase stock is up so much over the last few weeks. This may not be a fun period for the company, but it's going to be valuable in building the disruption that I think we could see long term. So that's the way that I'm looking at this. That's why I think Coinbase stock is up. But what's your take? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.